After scanning through hundreds of stocks, I have found the best setups to be trading at the best prices possible. This is going to prepare you to trade those best setups at the best prices. If you are looking to put yourself in a position to succeed, if you are looking to put yourself to be the most competent, prepared trader within the markets, make sure that you understand these top 3 setups that I'm going to be going over. One is going to be a short setup where you can buy put options on or short shares if your broker allows you to do that. And the other 2 are going to be potential oversold stocks that are long where you can buy call options on or buy shares, right? These are the most overbought and oversold stocks that correlate with my key gap trading strategies. We're going to be discussing day trading opportunities and swing trading opportunities. You can do both. I'm going to walk you through the strategy. I'm going to walk you through the key make it or break it levels, right? I'm going to show you how to confirm when this strategy is most likely going to work, right? So with this confirmation for me, it typically works a little bit over 70% of the time with the confirmation. Without the confirmation, it's just trading blindly. So I'll walk you through the confirmation. And we're going to be going over the key make it or break it levels. We're going to be going over the entry, the price target, where to be locking in profits, and where to set your mental stop loss if the trade goes against you, and where to cut it. Let's get straight into it, guys. My favorite setup is going to be Roku. So in terms of Roku stock, we are going to be looking for a short position put options on Roku. I'm going to explain to you how to day trade and how to swing trade this, right? So this is the pattern. This is the type of strategy that I'm seeing on Roku. This is purely based off of price action, technical analysis, the key gap trading strategies that I've created. That's what I prefer to do. I identify trends. I capture these trends in real time. I'm able to capture them in real time because I prepared for in advance and I set my price alerts. And when those price alerts trigger, most traders aren't watching these stocks at the key make it or break it levels and they miss the big move. So set your price alerts at the prices that I'm telling you. You can see on my chart, I got my price alert set. So here's the strategy, here's the trend, here's the pattern on Roku. There's 2 ways to short this, and I'm gonna explain to you the best way to short this, right? So the pattern with this stock is it's on a consistent downtrend. It is consistently going down. And when a stock is consistently going down over time, there is ways to make money dip buying this, but the overall trend is bearish. So the best way to scalp, the best way to swing trade is to scalp and swing trade with the trend, not against it, right? So in terms of the trend, we're in a bear market. Roku is a stock that is consistently pushing for new 52-week lows. It is consistently getting crushed. It is consistently turning previous support levels on the daily, previous support levels overall into resistance. And in terms of the best way to trade Roku and short this stock is this. This is the best possible pattern that I could be sharing with you with this stock. So it gapped down. Right here it gapped down. Massive gap down. Your previous support is right here at $144, right? It rips back up, it fills the gap. Previous support reacts as a resistance. How do you tell if it reacts as a resistance? This is the swing trading opportunity. Right here, it almost fills this gap. Previous support is reacting as resistance. Top wick, bearish candle on the daily. If you see bearish candlesticks on the daily, when a stock has a massive gap down like this and it rips back up, you want it to rip back up instantly, quickly, right? You want that overreaction to the upside. Previous support reacts as a resistance. How do you tell? Bearish candlestick on the daily. When you see it like that, right before the market closes, right? Because we don't know what this candlestick on the daily is going to look like right before the market closes. You want to swing trade puts. You want to short right here. And then boom, the trend changes, right? Previous support reacts as a resistance. The gap builds, it has a reversal. Combine those 2 things, man. Gap close reversals at key resistance levels. Massive gap down, massive sell-off, massive overreaction to the upside fills the gap, has a reversal. So now that you see the setup, now that you understand the pattern, right? The stock's on a downtrend, it gaps down, and it rips back up to previous support. Previous support reacts as a resistance. Buy the put options once that bearish confirmation forms right before the market closes. That's how I enter my swing trades. You can do this with day trading as well. So if you see it hit that gap or if you see it hit that key previous support and it's reacting bearish, it's forming these candlesticks on the 1 minute or the 5 minute chart, scalp some puts. Swing trades are not determined until the market closes. Right before the market closes, that is what we will know when the candlestick is bearish. We will know if it's bearish or bullish. So if it goes back to previous support and it forms a bearish candlestick on the daily right before the market closes, swing trade. Anything made before them is a quick scalp. 20 minutes, 30 minutes hold, like max. Quick scalp, in and out on the puts, make your quick 20, 30, 40% on the close expiration if that's your type of style. That's what I like to do, right? So this is the setup. The same setup is forming, right? Where's your previous overall support on Roku, right? Let's go over some previous overall support levels on Roku. We're going to go over some previous support. So right here, you could say your previous support is right around here. This is your previous support level. This is your support with nice upside potential, right? It sells off. And your new previous support is right around here. Now, your new previous support did not react as a resistance, which means the bulls are going to try to flip the trend. The bulls are going to try to flip the micro trend. They're going to try to run this up a little bit. So what we're going to do in this case scenario is we're going to identify 2 key levels to short Roku stock. There's some support right here, which can react as a resistance, right? So that's one of our key levels. And that level would be $55. But this is the level that I'm really interested in. And this is the level that I really want to short and buy put options on. It's going to be right here. There's a gap to fill above on Roku at $54.32. There's a gap to fill at $54.32, right? So what we're looking for is we're waiting for that gap to fill. I got my price alert set above $54. Once it triggers, I'll be alertified. I'll be notified on my phone, on my email, and on the platform. If I'm trading using desktop at the time, I'll be notified in 3 different places. I have that set up in my Thinkorswim settings, right? You could do that with most brokers. But make sure you set your price alerts because you need to be prepared to trade the best setups at the best prices. If you want to trade at the best prices, you need to have your alerts set, or you need to be watching all of those stocks, which is going to be impossible to do all day, every day. And that is something you do not want to do, right? Put yourself in a position to be competent, not incompetent. Don't stare at a screen all day and wait for a price to trigger. Don't force the trade. Put yourself in a position where you're saving your time and you're saving your money. So that's what we're looking for. We're looking for the bearish reaction, the bearish confirmation at this $54.32 level, right? So if you see it hit $54.32, and it's starting to form some lower highs, it's reacting bearish, it's forming resistance. It drops to like 54.10. It goes under, drops to 54.10, reacting bearish, forming a lower high. Scalp some put options closest at the money strike, right? So the way I scalp is I go with the closest strike at the money. So basically barely out of the money. In this particular situation, if 54.32 is the bearish level and it reacts bearish, I look for a small pullback, say it drops like 54.10, I'll go to 54 put strike out of the money, like 10 cents, 20 cents out of the money. I wait for the bearish reaction, right? And then what I do is once it reacts bearish, I wait for it to bounce. And then when it bounces a tiny bit, just a small bounce on a green candle, I'll buy the put options on that green candle. And I'm doing that with like a 1-minute chart, right? So I'll give it a couple minutes. If it reacts bearish here, it forms a lower high, it looks like it's going to drop, then I'll just buy a put option when it's barely out of the money, and I'll buy that put option on a green candle. That's for the scalping strategy. And then in terms of targets, it would head back to about right here, like 52.24, right around 52.24, right around there for a nice quick scalp. I wouldn't even scalp it that big. I would just get in and get out when it drops like $1. But yeah, that'd be the overall target, right? So I came up with the target by this. This is your support. Your support is at, 51.32. Your support is at 51.32. The closing price of this candle is at like $52 almost. So right around that zone, you're going to see a little micro bounce. You don't want to hold through it. When it drops below 52, it's probably going to have a small little micro bounce and then bring calls back into money. The 52 strike that went out of money on calls will probably go back into money. Just small little micro price action is what I'm talking about. But look for a small pullback around the range, right? So remember, it has to react bearish. If it just blows through 54.32 and then forms support and forms a floor, then there's no confirmation to buy a put, even though we want to buy puts, right? Because previous support reacts as a resistance, gap close reversal, it's hitting new 52-week lows. Yes, I want to buy puts. I want to short because the overall trend says that. Overreactions to the upside, it's fucking perfect. But if there's no bearish reaction, if there's no roof at 54.32, then I don't want to buy the puts because there's no confirmation, right? So best setups at the best prices with confirmation. Now, you have to trade the confirmation right. Once you get confirmation, don't just buy puts into a downtrend. Wait for it to have a small little bounce back up towards your key entry. Then buy the puts. Wait for bearish confirmation. Wait for the roof. Wait for the small pullback. Then buy the puts on a little bounce, right? So that's how you want to do this. That's how you want to play this. Those are the overall price targets. Now, in terms of swing trading, this is what I want you to understand about swing trading, right? So that was the day trading. So in swing trading, what you need is you need a bearish candlestick on the daily, which is not confirmed until the last couple minutes, into the market closes. So when Roku, these are going to be the key levels. When Roku hits 54.32, or when it goes, it could go a little higher, right? 54.32. If it doesn't form the bearish candlestick at 54.32, then what I would do is, I would just wait. for it to form a bearish candlestick. It doesn't matter what the price would be, in my opinion. I would just wait for it to form the bearish candlestick on daily, and then I would swing trade puts right before the market closes, and then I would look to take profits next day. That's what I would look to do, and I would risk slightly above the previous closing price, right? So you can see right here, look at this. There's a gap to fill on Roku. It fills the gap. It forms the bearish candlestick. Massive sell-off, right? Look at this. There was a gap to fill here. Massive sell-off. That was a scalping opportunity. Once you identify that that's resistance, see, it went above first. You see that? There was a gap to fill here. It went above first, but there was another gap here, and it even went above this one a little bit. But once it reacts bearish, you get in on the puts. And if it reacts bearish here and you get stopped out, just wait for it to go bearish again and try it again. Simple as that, man. And it's not going to work all the time. You could see right here, there's a gap to fill on Roku, and it just blasted right through the gap. This is why you have to use confirmations. You have to use confirmations, use candlesticks. You can use indicators, whatever it is that you can use, that you use and prefer to use with these strategies and these key levels and these gaps to determine if it's bearish or bullish, if it reacts to support, if it reacts as a resistance, right? But I will say this was just at 44.50. So it is due for some sort of pullback, and it is already struggling, as you could see. So it's going to be an absolutely gift, in my opinion, once it starts ripping above 54. You can see there was a gap to fill right here, bearish candlestick on the daily. And then what do when you see that gap fill and it forms a bearish candlestick? You swing trade puts right before the market closes. If it looks bearish red, bearish red, bearish red, bearish red, bearish red. You see how simple that is, right? So in terms of the swing trade, there's going to be a phenomenal swing trade opportunity. Wait for the gap to fill. If it forms a green bullish candlestick, once it fills the gap on the daily, right, and closes strong or closes like green like this, then just wait for it to go to a higher price. And once it has that first bearish red day like this, top wick, this bottom, this top bearish wick here, once it looks really bearish, even if it's above the gap, I would swing trade puts. So I gave you the day trading plan and I gave you the swing trading plan, right? And if you do take the swing trade, what you can do is, and if you want, you can just wait for the first red day as well once it fills the gap. That's another way to do it. If you take the swing trade, or if you do that the other way, risk like $1. Risk like $1 a share, $1.50 a share, above your entry, above the previous closing price, right? The previous closing price, wherever you're going to enter, is going to have to react bearish. Now, our next play is going to be on triple BY. So this is a very interesting setup. So the deal with this stock is, in terms of the price action analysis, as time goes by, this is going to hit new all-time lows. One thing I do genuinely like about the long-term history of triple BY, Bed Bath & Beyond, is it always recovers, man. I'm not saying it's going to, and I know bankruptcy and all that stuff, but it always recovers. No matter how low this stock goes, it always recovers. That's one thing that I like about Bed Bath & Beyond is whenever there was a gap to fill above, as time went by, it would bottom at some point and fill the gap. You can see there was a gap to fill below right here. It bottoms at the gap with a bullish candlestick on the daily, and then within time, it goes back up to fill this gap. And then when it fills this gap, it has a reversal, right? So you want to use these gap close reversal strategies at the most overbought and most oversold levels, which is why I'm showing you Roku. Roku's at a micro overbought level. Bed Bath & Beyond is at an extremely oversold, nearly all-time low gap level, right? So there's a gap to fill on triple BY at $3.94. There's a gap to fill at $3.94, right? This is the lowest gap to fill below. It's the lowest gap to fill below. It's nearly at all-time lows. It's at $3.94, right? Extremely oversold. Right? And it's going to try to have a gap close reversal at this level. As you could see, for 2 days, it hit that level and it has already bounced off that level. It has bounced right here, forming a bullish doji at that 394-ish level. It did crack, but it recovered right here and it formed more dojis in the 390s. Now, previous support right here, this is your previous support, is trying to react as a resistance level. So for this one, what I want you to be aware of is 402. If it can break above $4.02, and instead of turning this into a roof, into a resistance, if it can break above this and form a floor, right? So you see a little push up and then it pulls back and it bottoms at 402 or it forms higher support, you're going to see a nice little 15, 20% runner within some short periods of time, right? What would truly send this stock is if it can just break above 402, right? 402, nice little downside potential. If it can break above 402 and just have a small little bounce, right? And then it pulls back and you see a bottom at 402 or maybe a little bit above 402 by the dip, and it will have a nice little rip if it can do that. You can see right here, a rip to 430, right? So that's what I want you to pay attention to. Now, how is it reacting right now? Well, in terms of how it's reacting right now, it's reacting just like this. Your previous support is right here. It has a small move up. Your previous support is right here. Previous support is right here. Has a small move up in after hours. And then it drops. Previous support reacts as a resistance and then massive sell-off, right? So it's reacting the same way it did right here. Bearish. That's how it's reacting right now. So understand the bears are winning, keyword, right now, right? You must adapt and you must react. Our key levels, right? So we know what we're interested in doing at our key levels. We don't want to short Bed Bath & Beyond because it's too oversold. Now, if it reacts bearish, I'm not saying that you cannot, you could, if you want to, you could short the stock and you can make some money. But the problem is it's so oversold that it's not worth shorting, right? It wouldn't be a good setup to short. This isn't about trying to make money. I can sit here and say, okay, this is really bearish. It's reacting as a resistance. And I know it's going to pull back to 380 here. Let me short this at $4. I don't want to make money that way because it's too oversold. I'll find something like fucking Roku where this was just at $41 and it rips back up to 54 instantly. Look at this partial gap close reversal, partial gap close, big self. We have people bank on this within Trader Society. That's what I'll do, right? So it's not just about being bearish or bullish. You need to understand, you need to learn how to identify if a stock is bearish or bullish, right? But you need to also learn how to identify, even if it's bearish, I'm not going to short and buy puts. Even if it's bullish, I'm not going to go long and buy calls, right? Because we have certain standards. We have certain standards. We want to be trading the best setups at the best prices, right? But we need to have confirmations and awareness if that best setup and if that key level, that best price is reacting the way we want it to. Right now, it's reacting bearish, but that could change. That could change tomorrow. That could change a week from now. That could change 2 weeks from now, right? So you just keep setting these price alerts. You could set a price alert above $4.02. If it reacts bearish, set another price alert at 402. Reacts bearish, set another price alert at 402. Just keep on watching that level. Once it reacts bullish, whenever it happens, that's when you're going to want to buy it. So you have to understand, it's not just about the key level. It's about understanding, okay, is this reacting bullish? Is it reacting the way I want it to? Is it breaking out on the small pullback? Is it bottoming at that 402? Is it having a small bounce? Is it forming the bullish confirmations, right? So understand what the stock is doing, right? So right now we understand that it's reacting bearish, right? But we understand that could change at any point in time. And when that changes, you must be aware of that change, conscious of it, and take advantage of it, right? So, like I said, trade the best setups at the best prices. It's more than just saying, okay, this stock's going to go down, let's short it. It's not like that. We don't short oversold stocks. We short overbought stocks like Roku, right? Even though this is at 52-week lows, the pattern and the trend shows that, if it can fill the gap and react bearish, we buy the puts. If it reacts bullish, then you just wait for it to form a bearish candlestick on the daily chart and then just swing puts like I explained to you, right? You can see right here, this is a similar pattern. There's a gap to fill right here. It forms this red bearish candlestick. It fills the gap and explodes, but the bearish candlestick daily strategy, within some time, it did work. So that could be something that happens, right? It can, it formed the bearish candlestick, so it could just shoot back up and fill the gap. It could go a lot higher, but as long as that bearish candlestick forms on the daily and you're swing trading, you have, I'd say like 2 weeks, give it like 2 weeks out, then it'd be a good position to short. But yeah, in terms of triple BY, look for $4 to turn into support. And once it turns into support, it's going to rip to about $4.30. Like 430 is the target on that. So the way to make money on that is to go at a $4 strike. That's the way to make money on this. So basically, you stay at the money. If you wanted to play it even riskier, you can do 4.5, but I would stay at the money. You're basically looking to identify 4 to turn into support, and then you want to buy this as close as possible to 4. Look at these contracts, 18 cents, bullish doji, gap to fill at 62 cents. That would be a great opportunity. You see previous support right here, it cracks. Bullish doji on the contracts, rips back up to previous support, fills the gap, and then these contracts get crushed. That would be the play, man. So keep an eye on these. Keep an eye on these triple BY call options at $4 strike. Now, in terms of our next play, it's going to be Google. Google, I'm finding very interesting here. So the thing about Google is, it's oversold. That's the thing. That's why I don't want to short this. So this is going to be a potential call play, but it's an interesting one. I'm going to explain it to you here in a moment. Now, looking at the daily chart, there's a gap to fill on Google, and this has a lot of support right here, right? There's a lot of support on Google at this $56.81 range. There's a lot of support at $56.81. So this stock is trying to turn that key level into a support level. Now, this is what I need you to understand. This is true make or break, right? Even though it's oversold, this is true make or break. So here's what we know so far. We know that it filled that gap on the daily, and that daily, gap was very low, very oversold, very nice support. You can visually see, this was a nice support channel with some nice short-term upside to about $90 a share. So it never really got a chance to kind of react, right? It never really got a chance to react at this line. It simply just gapped down, and then it followed up with going lower. But it never really hit this line until Friday. So this is what I want you to understand. If Google can turn $58.70 into support, start to break out, start to react to support, it's going to try to fill this gap at 87. Now, here's what it can happen. There's a gap to fill at 87. So when it fills the gap at 87, then if it starts to react as a resistance form a roof, and if it can crack on 56.70, it's going to flip super micro bearish, and it's going to go back down to fill this gap below at $53.49, right? That's what it's going to do if that occurs. Now, if it can push above 56.70 and just stay above that, and then break above this 87.07, break above that, it is going to start to rally. It is going to start to be bullish rally to your overall support of like $88 to $87.50. Like it's gonna start to rally back to $89. Like it's gonna start to rally, right? So understand we're at make it or break it levels. If this reacts as a resistance and it's failing to break out, not a good sign. If it then cracks under 87.70, super bearish, gonna fill the gap at 83.49. If it fills the gap at 83.49 and you see it reacting bullish, then you're going to want to be buying calls. You're going to be wanting calls, right? So if you're studying it here and it reacts bearish, wait to buy it down here. If you're studying it here and it reacts bullish, the most you should risk is right here, 86.50. You just have to understand, even though on the daily it's oversold, for the micro, there's a gap to fill here and there's a gap to fill here. So it could fill this gap, have a reversal, and come back down to fill this gap, making this the best entry for the micro. On the daily, we are oversold, but we haven't gotten to see how this reacts at this 87 gap, on the daily and on the chart right here. So it's going to be interesting, but just understand, man, buying little micro breakouts is not the best thing to be doing within this market. The best thing to be doing was to be buying down here at $83.49 when it goes back there. That's the best thing you could be doing on Google. So set the price up. Remember, that's the best thing to do. If you decide to attempt the breakout, just understand the max risk on that would be 86.50. And understand if it tops here and it goes under 86.50, that's a little micro opportunity for shorts, for puts. Not the greatest thing to be doing because it just is so micro oversold. But at the end of the day, man, this is a gap. And if it reacts as a resistance, it's going to go back down to fill this gap. And if this reacts to support, it's going to rocket back up. So pay attention to those key levels, this little micro channel. This is a micro channel. Now, looking at what happened here, and this is interesting as well, your previous support has been reacting as a resistance on Google stock, right? So your previous support right here, this is your previous support, reacted as a resistance. Big sell-off, right? This is your previous support. Now, if that reacts as a resistance, if you see a bearish candlestick on the daily chart that reacts as a resistance, swing puts, it's going to go back down to here, right? If you see a bullish candlestick on daily above this 87, then swing calls. So in terms of swing trading, bullish looks bullish, nice bullish candle 87, swing calls. Nice bearish candlestick 87, swing puts, right? That's another one I would look into potentially. It's just with Google, this is so micro oversold, and it seems like it's just due for a pump. It seems like it's due for a pump. So 83.49 is the best level to buy the dip, that gap, and pay attention to the 87 breakout. Now, if you're buying at 83.49, your price target isn't above 87. That's another thing I want you to understand in terms of like scalping and stuff. I'm not looking for, so like my style of trading, I don't like breakout or bailout traders. If I'm buying a dip, I'll sell into the rip. I won't even sit here and see how it reacts at 87. I'll just sell into like a rip even below that. Another thing in this bear market is this was just at 83.50. So like, and buying at previous support with a little micro resistance level isn't the most like enjoyable or best thing to be doing. Best thing to be doing is really buying a dip at the gap where your support is. That's the best thing to be doing. So like the best thing to be doing isn't to be buying this at $87. Best thing is, it hits 87, it cracks 86.50, goes bearish, fills the gap, and then it reacts bullish once it fills the gap, then you did buy it. And ideally there'd be a gap to fill above, which would make the setup even better. But I'm just looking at Google, man, and there's just it just seems like oversold. Like it's oversold. Nice bullish candlesticks, gaps to fill. But just understand, man, that's make it or break. I found this an interesting chart because it's at key support on the daily right here. This is like very, very key support. It's like 83.50 range. A lot of support. Upside potential to like $90 a share. It formed a bullish candlestick on the daily. So like to flip bullish, all it really has to do is break above 87 and turn that into the floor. That's what I want you to pay attention to on Google. Bonus stock to keep an eye on, not too interested in it, is META. This one has filled the gap, so it's getting a little interesting here. What can reverse the trend of bullish would be, wow, look at that beautiful gap close reversal on META here, right here. You could have used that on the 5 minute, say, okay, bearish candlestick on the 5 minute. Let me buy some puts right here, and then boom, massive sell off. Great play on a META there. But for this one, what would flip it to bullish is it needs to basically turn this like $91. It needs to turn 91 to 91.30 into support. If not, it goes back to 88. I do like the candlestick on the daily chart is a little oversold, but you know how it is in this market if you're trying to buy breakouts, because at the end of the day, that's kind of like what it is that you're doing in a sense. Even though it's oversold, you're buying a breakout. In this market, you want to focus on shorting and shorting at resistance levels, not at key breakdowns. And shorting at gap levels. That's really what you want to be, focusing on within Trader Society this week. That's what we were focusing on. We identified, there's a gap to fill here on SPY, $388. A lot of resistance at this $388. FOMC, I was buying put options at 387. I was buying put options at 385. I was buying put options at 383 because it kept on turning previous support into resistance, and the overall trend was bearish. You could just visually see. That was the perfect setup, and I brought a lot of awareness to that in my previous videos. There was a gap to fill here on the SPY at $390.12. Previous support reacts as a resistance, fills the gap here as well at 388.55. Massive downside potential in the same day, all the way to $377, right? So I brought awareness to this pattern, and then that's why I made that video. Is the stock market about to crash? And surely enough, it reacted bearish. And once I got my bearish reactions, I said, okay, this video that I just made is going to absolutely work. So I'm going to start buying put options. I played put options at 387. I played put options right here when this previous support reacted as a resistance. Bought put options. See, this is bearish confirmation right here. Previous support right here reacts as a resistance, big sell off. Previous support right here, reacts as a resistance, big sell off. I played puts at 387. I played puts right here at 385, and I played puts here at 382 on the rips, not the dips, right? On the rips. That's what you got to do. Wait for support to crack. This is support. This is like your support right around here. Wait for it to crack. When it rips back up, bearish confirmation, puts into the rips. I'm using like a couple, like two bearish 1 minute candles I'll be in. And then sell into the dip and then rinse and repeat. Your support just cracked. Your support just cracked. Massive downside potential. Wait for it to rip back up. Previous support reacts as a resistance. Buy the put options. Rinse and repeat. Sometimes it's not going to go back. This would be your new previous support right around here. It didn't go back on this day. So guess what? You don't get to rebuy the puts. But you had two great opportunities. Trend was bearish. I bought puts into the resistance because of the gap levels. But in terms of previous support into resistance, one opportunity right here, one opportunity right here. 3 nice trades within like 45 minutes. It's absolutely crazy, man. Those put options that I had at the 382 strike, they 10x'd in less than an hour. It was ridiculous those same days. But yeah, that's just some strategy talk, some things I wanted to go over. But those are my overall setups. Those are my overall trades. If you do want to be a part of Traders Society, that's going to be the first link down below in the description. Everything is explained in terms of what you get and what's included within Traders Society. And the first link down below in the description. I will see you guys tomorrow at Market Open.